Her mortality was threatened. Her ability to work was threatened. She got sick. She got diagnosed with breast cancer. There's a COI cost of inaction.
New and higher health care premiums for millions of Americans.
Health insurance costs skyrocket.
The average person receiving Obamacare tax credit rise by an average of 114%.
What does Darwin exactly do?
My full name is Darwin Roman, and I focus on retirement planning and life insurance. We're trying to go from being a flower, attracting one bee, to being a garden, and attracting thousands. You can do that by serving others. That's the way I feel. Your inaction is costing you something. You just don't realize it yet. But you're going to pay for it way later. I have a friend that years ago, her and I had conversations a lot about life insurance. And then eventually she got sick and it became too late. The calendar and the clock are the biggest liars that we have in our lives. There's an old saying that a good plan executed today is better than a perfect plan executed tomorrow.
Darwin, thanks again for coming to the podcast one more time.
My pleasure. Returning
to the podcast, man.
Yeah, there you go.
Yeah, listen, this time I wanted to talk to you to actually go more in detail about what you do and how you can help people really save money and secure their future. And a bunch of other stuff that I know that you do, because sometimes I feel like you're everywhere because you're so influential.
Yeah.
But there's always a lot of questions. I'm like, what does Darwin exactly do?
Right, exactly.
Yeah. So before we go into that, if you could just give us your full name. I know a lot of people know you, but if you could just give us your full name and what do you do?
Sure. So my full name is Darwin Roman, and I focus on retirement planning and life insurance.
Okay. How long have you been doing that?
16 years.
16 years. Mm-hmm. And what got you into it?
Well, it was actually because of not the most happiest moment. There was a time in my life when I was married, and the woman that I was with at the time, she got sick. She got diagnosed with breast cancer. And crazy enough, I was in a moment in my life when I wanted to transition careers. At the time, I was in the fitness industry, and I wanted to get out of that. And so during that moment when she was going through her phases of recovery, and also we're talking about life in general, her mortality was threatened, right? Her ability to work was threatened. And so questions came up about, well, if the worst happened, what would happen to her? What about children? I mean, at the time, she still does have 3 kids, my stepkids at the time. And so all these questions came up about risk and the longevity of her and her health. And that's what drew me more to the idea of the kind of business that would help people to prepare for these kind of unexpected situations. And so the finance market always intrigued me. Growing up in Jersey, living so close to Manhattan, my mother and father worked in the banking industry for years, and so as a kid I would go and visit them at their offices.
Where did they work?
So my mother, at one point, for many years, she worked for a Mexican bank. It was called Banco Comermex, and she worked in the investment firm as an operations manager. So she worked with a lot of traders. So a lot of these guys and women were in the Wall Street office working with Mexican investors, trading in the New York stock market. And then my dad, for years, he retired with working for Banco de la Nación Argentina, Argentinian bank, and he worked in letters of credit for years and retired there. So whenever I would go visit them, at their job, during the summertime, right, there was no camp available at the time, so I had to do something. They would come in and see me at the office, and I would go see them. And so as a kid growing up, I would be around and just marveled at this whole environment of Wall Street, right?
And this was done in Manhattan.
Yeah, midtown to downtown. I left that impression on me, and for years I thought about it, and then eventually this happened in my life. This change, this threat to my ex-spouse. And so I decided that was the direction I wanted to go. So I changed careers. And in 2010, I ended up getting my licenses and working in the industry. And here I am.
So at that point, you had to get life insurance, just in case something was...
Right. So she ended up getting more life insurance. Actually, she ended up becoming a client of mine after she recovered.
Yeah.
And we went from there. Yeah.
Now, what type of life insurances are there? Because I know everyone thinks, okay, life insurance is life insurance, but I'm sure there's different ways to use it.
Right. And the easiest way that I can describe it or illustrate it is using the analogy, which I use all the time, of real estate, right? It's renting versus owning. So there's term life insurance and there's permanent life insurance. And I'll go into what permanent means, but term is like renting. So like renting an apartment. Permanent is like owning or like owning a home, right? And what does that mean? Well, let's go with term. Term insurance for a certain term of time. 10 years, 15 years, 20 years, even 30 years. But once that term expires, just like a lease expires, what do you have to do with the lease? You have to renew your lease if you want to stay in that apartment. Well, if you want to keep the policy, you'd have to renew the policy. You'd have to, after the 20 years expired, you'd have to get another policy, right? Now, the difference between that and permanent insurance is like owning a home. When you own the home, you own the property, you own the house, and eventually you own it free and clear of debt, right? Because you pay off the mortgage. Similar function with permanent insurance. And permanent insurance, people say, I never heard of that, but you probably did. You heard it as whole life insurance or universal life insurance. These are policies that over time build what's called cash value, similar to what, again, my analogy back to owning a property or owning a home is you build equity. Right? So you build equity in a home, but you don't build equity in an apartment. You build equity or cash value in a permanent life insurance product. You don't build equity or cash value in a term product. So that's the big difference in how they function. Which one's the better one? That's the question I usually get. Yeah. The best life insurance policy, the reality is this, is the one that is in force the day you die. So which one would that be? Who knows? Because who knows when that can happen, right? So the point is that having a policy, period, is a good choice. The question is now the function or the goal. Are you looking at to build as an asset class? Are you looking for a fund that you want to borrow against later on in the mid to long-term savings, maybe in retirement? Then a permanent insurance policy has a good fit for you, right? I tell people I look at a two-hand approach. If on one hand, you have a need for death benefit and protection in case you get sick, you want to make sure they're taken care of, mortgage paid off, kids are funded for college, that's term insurance for sure. On the other hand, if you need long-term savings, you want to build some kind of equity or cash value, you're looking maybe to borrow against a vehicle that's not reported on the credit agencies, by the way, then you put those together, you have a really good fit for a permanent insurance product. But like I said, either hand has got to be there.
So I guess because my thinking was always like, okay, if you're young, like go ahead and get a term insurance. Tends to be cheaper, right?
Tends to be lower cost because for that reason. So, and that's why the other analogy I come up with with regards to owning a property versus renting a property, right? I think that, and this is coming from my real estate friends, some of the common objections of somebody renting is like, ugh. Yeah, I could buy a house, but then again, I got to come up with this, I got to come up with that. Out-of-pocket costs, the roof, the basement, something goes wrong, it's on me. Like, why do I want to do that? My landlord takes all that crap. I don't got to worry about that, right? Like, I get it. It's more comfortable that way. A little more uncomfortable owning a home because it takes more money out of pocket to support it. Well, similar thing happens with permanent insurance, right? So if you're in a position to start with a term policy and you're thinking about young people, and I think it's a great idea for anybody to get at a particular time, but term insurance is a lower cost way to get a large death benefit.
And I'm sure there's, not to get into too much into detail, but more or less, like how much would a life insurance policy cost, like a term life, as opposed to a whole life?
Right. So for example, when it comes to costs and people asking me like, how much would a whole life policy cost me? Well, we have to change the vocabulary because really this is an industry of language, just like any other industry. Languages that we're using here is not so much how much is costing you to put money into a whole life policy, for example. The question is, how much are you looking to contribute to the policy? Because that policy will give you a return, right? As opposed to cost. What's your budget to be able to protect all of this? That's more of a term conversation because term is just cost. It's like if the same thing would ask homeowners insurance, that's cost. Car insurance, that's cost. Health insurance, that's cost. Dental, that's cost. Life insurance, term life insurance is just cost. Funny enough, the only policy in anybody's portfolio that can actually tap into for like a value today for me, meaning like what can I get out of it myself, is a permanent insurance product. So then that's why I say, if you have a 401k at your job, you don't ask, well, how much does my 401k cost? Well, it costs you nothing if you don't get it. The question is how much you want to contribute to it, because eventually there's a result to it. Similar thing happens with whole life insurance versus term life insurance.
How would you approach a conversation of my example, right? Yeah. And kind of, let's say I don't have any insurance policies or anything. I'm like, okay, how much should I be covered for? Like, because a lot of people will come in and just have like a random number, and sometimes that might not be the correct one. Like, how would you approach that?
Yeah, I go about it, I call it a 3-target approach, right? And going back to my military background, I look at things at a target. So 3 targets. Target number 1 is asset protection, meaning if you have an asset, maybe you have a business or you have a home. Your home is your asset, your mortgage, right? That's number 1. Number 2 is income replacement. Usually there's 2 people in a dual income household. If one person's gone, what income is that we're missing? So we have to replace that income, which is usually the rule of thumb is 5 to 10 years worth of your income being replaced. So whoever's left behind can have that income to count on, at least for a certain period of time, right? And the 3rd target is college protection. Now, you have little ones, right?
Yeah, I have two
How
little
old
ones.
are your little ones right now?
6 and about to be 4, yeah.
6 and about to be 4. And one just graduated kindergarten?
Yeah, one just graduated kindergarten, now, going to first grade, and it feels like, oh my God.
Okay, so I'm going to add more emotion to that. Now let's fast forward, right? You're going to time travel. I'm going to time travel that both your kids are graduating high school this month, right? Let's pretend that. That's like, oh my God, it's crazy. But think about it. When people ask
It
me,
might fly. 'Cause sometimes I saw my daughter yesterday on a graduate, and I was like, holy crap! I mean, she's so big.
yeah, it will fly by. I tell parents, all right, let's look at college protection. College protection is to pay off or to leave dollars behind for college expenses, college education. But then if you have a 6 and 4-year-old, it's like, well, I don't know what college is going to be like by the time they're 18, 19 years old. Who knows, right? So then I say, okay, let's time travel for a second. Let's pretend that both of them are 18 years old right now, and they're graduating high school this year, this summer, they graduated. And you're about to pay 4 years of college all in one shot, all in one check. How much would that cost today? And let's use that as a way to gauge it, right? So people will say, well, hell, if I'm going to go to, let's say, I know this personal example, Hofstra University in Long Island, that's about 50 grand a year. Okay, or St. John's University in Queens, that's about 50 grand a year. That's $200,000 per kid. And I would say, all right, Danilo, let's make sure that we have $200,000 per child earmarked in the event you're no longer here, that's for their college education. There's $400,000 right there of benefit that we need to cover, right? So let's say, for example, you tell a person, going back to this calculation, let's say it's a person says, I make $100,000 a year, I have 2 children, and I have a $300,000 mortgage. Okay, well, let's take care of that mortgage. That's 300 grand. Let's take care of your income, 5 times your income, 500 times 100,000. It's $500,000. You're 800 grand now. And you got 2 children, 800 grand plus the 400,000 we talked about for college. Now you're at $1.2 million that you actually need for life insurance to what I call is enough blanket to cover the bed, right? Yeah. And we could start there. And I said, okay, that's where we should start, 1.2 million. That's how I calculate it.
But when I got my term life insurance, I was like, basically, I looked at my house. I was like, okay,
Good.
You know what? The kids are going to need college.
There you go. That's target 2. That's a target.
And do I have any debt? Like I had some personal loans and some cars and everything. I was like, okay, boom. When it comes to whole life insurance, how does that work? Because I'm always confused on the, what is it called? The death benefit and whatever the other
cash
benefit,
value.
Cash value.
Right.
How does that work?
Yeah. So when it comes to like whole life products or universal life product that's permanent insurance that builds cash value, I think that a big factor to determine whether or not it's a good fit, number one, but number two, how do you calculate that? Then it becomes more of a savings vehicle, right? And like, I'll give you a perfect example. People who have pensions, right? Nurses, firefighters, police officers, I work with a lot of them. They will eventually retire and get a pension, right? In their case though, they have to pick an option, usually as a survivor benefit. What does that mean? Just like my dad, matter of fact, when he retired from the bank, they gave him a survivor benefit option, right? What that means simply is that you're married, you're retired now, you're receiving a pension. But option A is, let's call it $6,000 a month they're going to pay you for the rest of your life. However, with option A, keep it things simple. With option A, should you retire and you pass away in retirement, your spouse gets 0. Nothing. Okay, that's one option. Or you can go with option B. Option B could be $4,000 a month, right? But Danilo would say, hey, Danilo, you served the town of Bridgewater as an honorable police officer for 25 years. And if you want option B, this means that if something happens to you during retirement, you get $4,000 a month. But if you pass away, your spouse will also receive $4,000 a month for the rest of her whole life. Which option would you want? And some people say, well, okay, if you remotely like your spouse, you go, okay, I'll take option B and take my $4,000. But realize there's a differential, right? There's a $6,000 versus $4,000. That's $2,000 difference. So I educate people on that and say, well, what's happening really there is that the pension system is defaulting you to a very expensive form of life insurance when you think about it, because you're giving up $2,000 a month, which is $24,000 a year, to make sure that your spouse gets a benefit. Why do that then when we could do something now for about a third of the cost, fund it properly at your age now, let's say you're 40 to age 60, pay that, and then use that policy as a strategy to maximize your pension benefits. So now when you get to retirement, you'll say, you know what, I'll take option A because I already have a policy backing me up.
Yeah.
That's one of the many ways where people use it. Real estate, some people will use it as a way to borrow against. It's a cash position, because in our lives we have 3 cash positions. The third one is people that don't realize it, but the first 2 are very common. Number 1, savings account. First cash, I take it back, checking. Most people have checking. That's where most of your dollars go. Direct deposit, everything. Checking. The second position, savings, right? Not many people get direct deposit to savings account, but they'll use savings account for savings for that reason, right?
Yeah.
But a third cash position can be a life insurance policy, cash value life insurance policy, because it is liquid. It's a savings plan in a way. So when people will say, well, I can leverage my policy for other things, correct. I have real estate investors who have funded their policies over time and will use the values in their contracts for fix and flip deals, right? So for example, let's say, hey, you and I, we find a property, we're gonna rehab it, and you tell me, Darwin, we're gonna need 30 grand each a piece to go in on this thing, and the rest we'll finance through hard money or something like that, right? Okay, you get your 30 grand, I get my 30 grand, but then I don't have life insurance, I have a savings account, I'm just gonna take it out of my savings account. You have 2 life insurance policies, and you end up borrowing 30 grand from your policies. Now, why are you at a better position than me? Well, because of the fact that I just liquidated 20 grand, you didn't. Or 30 grand. You did. You borrowed. You leveraged it. OPM, other people's money. You're leveraging the life insurance company's money, not your own. Where I took 30 grand liquid out of my pocket, right, to do this deal. Then the deal goes well. Okay, we'll make our money back plus an extra 20 grand. I put my 30 grand back to my savings account, but I'm just back at where I'm at. The 30 grand you borrowed against your life insurance policy actually is earning interest while you borrowed against it. So your loan is making you money while you're borrowing it. Now, the other part is I just took away 30 grand from my savings account. If I need more money, it's already locked up. You still have liquid money somewhere else. You just borrowed that from your life insurance policy. Plus the fact that that money does not show up in any credit report. So it doesn't affect your DTI, doesn't hit your borrowing capacity, right? So it's a great deal when you leverage it properly. So there's another example as to how that would work.
Just to confirm, so it acts very similar to a 401k loan.
Very similar,
So
right?
You're basically paying yourself back.
Right, you're paying yourself back. And the difference here with 401k versus, and I just had this conversation last night at a networking event with a CPA/tax strategist. And she said, I did the same thing with my 401k. I said, great. I said, but just keep in mind, your 401k right now, last year did amazing. I said, right? I was like, what if you had the bucket of money to borrow from your policy and the same bucket of money to borrow from your 401k, but the market's going great? Well, rather than drawing down from your 401k that's doing wonderful for you, borrow against your life insurance policy. Let your teams do the play for you, right? Right now we're watching the World Cup, right? It's defense and there's offense. The same thing happens when it comes to planning for retirement or planning for the future. Your offensive play are your investment accounts, like your 401k, your IRAs. Your defensive play is your insurance portfolio. That's where your defense comes in, because if you start losing, right, your defense is there to protect it. If you start winning, your offense is there to gain its points.
So now the other one is, because a lot of the 401ks will, when you borrow against a 401k, they basically take that money out and that money is not actually working for you.
Right. Right.
So it's completely different with the life insurance.
Correct.
Right?
It's completely different.
They're
Right.
just basically that value stays there working, whether that will be a variable and fits, right? Or
Yes.
not.
Yeah, well, with
Similar
loans?
With loans.
Oh, yeah, there's a variable rate and a fixed.
I mean with insurance as a whole. So like, because I know with an annuity, you have a variable annuity and a fixed
Oh,
annuity.
correct. Some policies operate differently when it comes to building cash value. Whole life contracts, particularly, will use what's called a dividend scale. At the beginning of the year, they declare a dividend, and that's how it's building cash value. Other policies will use it's called an index universal life. They'll use an index like the S&P 500 to credit your policy a gain, for example. So that's the differences. So either credits or dividends is usually the driver for these values in the contracts, but it depends on which policy you get.
Now, what's the difference between an annuity and a whole life insurance?
Okay, so an annuity is meant for retirement and just income, right? So for example, I have clients that may have an old 401k from, let's say they went from one employer to another, and they have an old 401k that's left there and they're not really doing much with it. They can put it into an annuity contract. Annuities, the benefit of annuities is that you get some of the upside potential of the market with zero downside. So again, it's a defensive play. But then also when you trigger an annuity, it's usually meant for income, right? Some people say, well, it's all about retirement or return on investment. Well, then again, but it's also results on your investment, right? That's another ROI. Like, what result am I getting? Yeah, I can get maybe 8-9% gain on my values of my investment portfolio, but this annuity contract is going to guarantee me a $3,000 a month income for the rest of my life. That's a result. Like, how do I get that result from? So it's about results too, and that's where annuities come in. Annuities actually are like a pension fund as well, so they're guaranteed income.
Okay. Now, when you're taking money out, so you mentioned that on a whole life insurance, you're able to just get a certain amount of money per year, right? Per month, whatever, right?
Right.
Is that money taxable income?
Oh, yeah. Whenever you take a loan from a life insurance policy, it's not taxable to use income, right? Because a loan is not taxable, right? Yeah. That's why they have to code it, or rather call it a loan, and they will attach an interest rate to the loan that you borrowed from against your policy. There's some people out there that will debate this, especially when the people that are anti whole life and anti permanent insurance, and they go, why would I borrow my own money? It's like, well, you're not borrowing your own money. Okay, my rebuttal to that is say, well, why would you borrow against your own property? Right? Well, then it's okay. Do you believe in equity, sir? Sometimes I get that debate. Sir, do you believe in equity in a home? Yeah, sure. Is it real? Yeah, you can tap into it, right? Why would you want to do that? It's your equity. It's your money. Why would you want to borrow the equity on your own home? You own it, don't you? Right? Yeah. Similar thing here. It was like you're leveraging it. The question is why you're leveraging it, right? But the point is that the policy operates the same way, almost as a HELOC. So it's not taxable to use income. However, it's an unstructured loan versus a structured loan, right? As a lender, right? It's terms. Yeah. You have to pay me back at 24 months, for example, this much interest rate. Life insurance policies don't work like that when it comes to loans. You can pay back as little or as much, as quickly or as slowly as you want. It's unstructured. So that's the other part to it.
I see. Now, when is the best time to... I think I know the answer, but when is the best time to buy life insurance?
Yesterday.
Yeah.
You know why? Because nothing's guaranteed. This is more of a sad story. I'm going to have to share it now. So, and this is really, and it's been hard for me to share this, but it's getting easier and easier as I say it. I'll give you an example when people wait a little too long. And it's because, sometimes things change. And I have a friend that years ago, she got sick and she wasn't prepared to get sick, right? And so, and prior to her being sick, her and I had conversations a lot about life insurance. And then eventually she got sick and then became too late, right? And so I think a lot of us think that we have time on our side. We really don't. If anything, the calendar and the clock are the biggest liars that we have in our lives, pretending like they're going to be there always. They're not. So you're always as healthy and young as you are right now. So there's no really need to procrastinate. So it's like, for example, a person will say, I'll just wait to buy real estate. You don't wait and buy real estate. You buy real estate and wait, right? I think similar thing here.
I have these conversations with all my clients all the time. It's like, they go ahead and they call me out of nowhere and they're like, yeah, I'm interested to buy. I just want to have some questions,
Yeah.
But they never put the trigger on actually sitting down and going over what's going to take to buy the home. And then they wait. Mm-hmm. And then it's like they come back and be like, oh, I can't qualify.
Right.
It's like, oh, well, listen. You just, one of my biggest, lessons, one of the biggest things I've learned in this business, being going on over 20 years now, is that you have to prepare yourself. And then when the right time comes, you're already prepared to take that step.
Right.
Because if you just wait until you feel ready, quote unquote, that moment never comes. And then when it comes, you're just not ready because you don't know what the heck it's happening behind. You don't know how to go about these things because it sounds easy, but it's not.
Yeah, exactly. You know what? There's terms about that regarding that psychology. And the point is that there's a term called COI. Right? COI as opposed to ROI. ROI is return on investment, but COI is cost of inaction. There's a COI to everything that we do. And not just financially, it could be your health too. There's a cost of inaction for that, right? So people have to understand that if your inaction is costing you something, you just don't realize it yet. But you're going to pay for it way later, big time, right? And unfortunately, we live in a society fortunately, we live in a society, I will say this, that there's so much free information, but the dark side of that is that most people you take the information and you're just like gluttons, man. You're just taking it in. There's obesity is a problem in this country. It's also infobesity, like people just taking in, eating, and not doing anything about it. And so they need to take action. That's what we're talking about here.
This is the first time I hear about that infobesity. But
by the way, I didn't make that up. That came from a book called Wealthy and Well Known, written by Rory Vaden. So just want to give it a footnote
but you
there.
know what? It is true because I catch myself.
Yeah.
A lot of times going in and thinking, okay, like, oh, this is what you need to do, and then you research.
There we go. Research.
And then, I mean, nowadays with AI, like everyone does their own research.
Mm-hmm. Yeah.
And you research, and you just don't do anything.
Right.
And I had conversations with a couple of friends where like they go like, oh yeah, no, this is how you do it. And I'm like, okay, but are you actually doing it? Because when you go actually and try to do something, you just you never do anything.
Yeah, and then I think it's because we strive to have the perfect plan. There's never the perfect plan. There's an old saying that a good plan executed today is better than a perfect plan executed tomorrow.
So now, like in that same topic, like what is it that, because a lot of people think, okay, you know what, I don't need to do this right now because I don't have money, because I'm just living paycheck to paycheck, or like I only have a few savings here and there, and you know, why should you think about these things right away, and how is life insurance connected to like everything else in your financial plan? Right. Because we think, obviously, you know, everyone thinks of financial planning, they think investing, making money.
Right, making money.
And nobody thinks about protecting
their money, right? Because you don't protect the money, there is no making it, right? Yeah. So, for example, a person that say, I'm living paycheck to paycheck, I'm only renting an apartment, but still there's a need for it. Okay, so you're living maybe at a modest means. We won't call it paycheck to paycheck, but you're living, you're watching your dollars, right? But obviously you're working. Now, what if you get sick on top of the fact you're living modestly? Would that be worse? Yeah, right? So the idea is that there's always room for protection, whether it's a little bit or a lot. It's just a matter of taking the action on it. So, and I found a budget for every person, right? And also, unfortunately, we live in a very today and now society, infobesity, right? Social media showing us what's hot, what's new, what new sneakers, what car's great, and people will find the money for something if they really, really want to, right? They'll do that, you know. So if we can find priorities and giving value to a client, to a person, saying, "Hey, listen, that's important, but none of that happens without protecting you," right? That's where I come in and have that conversation. So for dollars a day or a few dollars a week, can we find something? Sure. It's a matter of doing it.
Yeah, no, absolutely. Yeah, yes, you can. A lot of people are very good at finding money for things that they
exactly. I can tell you, again, going back to the World Cup, I can say, all right, listen, you're a Colombia fan. I can get you a ticket right now. I know you got nothing in your bank account, but if I can give you a ticket right now for $500, can you get $500 like today? Like, I'll tell you a ticket right now. Guarantee that person will find the $500.
Oh, right? Yeah. I mean, at least I have this conversation with some clients where like we sit down and we look at numbers. And they go ahead and say, actually, a real life example. I have this client who they both make about $300,000, and they're stuck of like, hey, I just want to keep my, you know, I don't want to pay more than $4,500 a month in a mortgage. I'm like, okay, listen, you want to do things right. But then as we start digging in, we realize that, hey, you don't have any savings. Where else is this money going towards, right? And the conversation, it turns into like, hey, where do you really want your money to go? And the reason is not so much as to like, hey, you want to keep the mortgage payment low, but when you start realizing that it's really almost impossible to pay less than $5,000 a month, because, you know, unless you're putting a big chunk of money down,
right,
you realize that you have to make choices. Mm-hmm. It's like, okay, am I going to spend money on traveling and going out every single weekend, or am I going to go ahead and spend $500 or $1,000 more into a house that not all houses are great investments, but for the most part, it's a much better investment than renting.
Yeah, exactly.
So it's like, it's about choices.
I've met people that I've looked at their financials and I said, okay, you have your car note is a beautiful Range Rover, is $1,200 a month. And I said, how much are you contributing to your 401k? They go, oh, I put $300 a paycheck. I said, so that's $600 a month you put to your 401k, but you pay $1,200 a month to your car. Why? Yeah. Is that car going to help you retire? Yeah. Can you liquidate that car? I mean, you know, and same. And by the way, it's just new levels, new devils. There's also clients that we've come across in my firm that have Ferraris. Same thing. You have now a $500,000 vehicle, but you have less than that in your retirement account. How's that possible? Yeah. Right? It's all priorities too. Yeah.
You know, the good one is like, people don't want to go ahead and go $10,000 or above asking price for a house, which it comes out to about $60 a month. But then they will go out and go to like a not so good restaurant and drop $200.
Exactly, because you know when you go to the restaurant, you don't get to tell the chef or the owner of the restaurant, hey, can you give me a lower price than the steak? No, you pay it.
Yeah, you pay it.
That's not how it works.
Yeah. Going to another topic, because I mean, you're pretty much everywhere. You have the Latino Chamber of Commerce. You have, you know, I know you were involved with NAREP, a bunch of other organizations. And one thing that I admire about you is that, I mean, you think of something and you go at it, right? So how did you talk to me about like the decision to go into this business? Obviously, you were in fitness before. What were some of your fears going into this business? How was that time, if you can remember? Okay, like I'm always very intrigued on like talking about inaction, or like how some people take the leap.
Yeah.
And do something when like, okay, you get information, you decide, hey, this might be a good business for me. How do I go ahead and move into it?
Regardless, and what I learned later on was that no matter what I was doing, I was always dealing with people. and solving a problem. So transitioning from the fitness industry and helping people get into better shape and losing weight, I had to let go of that identity and to take on a new identity. That was the biggest fear. How will people see me? How do I go from being the guy in the gym to all of a sudden wearing a suit and tie talking about money? How does that work, right? And really, the reality is that people don't know the identity. It's kind of like the similar feel or similar philosophy that goes on with regards to the fourth wall, right? The fourth wall exists in TV and exists in theater, right? And I'll give you examples. I remember a long time ago, one of my many things that I've done is acting, right? So at one point when I was young, I actually did an off-Broadway play. Nobody really knows that, but off-Broadway play. Didn't go anywhere, but I did it. It was one thing I wanted to do, get on stage. And one guy, during one of the scenes, he lost his lines. That happens. You all of a sudden you just and there's he's sitting there in the scene with the partner. It's a woman. He's the guy, and he's like looking at her, and he just blank. Like he just lost his lines.
It happens here sometimes. I'm talking to people and I go like, this is why I have the iPad, because sometimes I realize that, hey, like sometimes you just go like,
oh my God. So he loses he just goes blank. He forgets his lines, like doesn't have it. And later on, he kind of recovers and picks it back up. I asked my friends, one of my friends asked me later, he goes, yo, man, that kid, excellent actor. He was like just so serious and he was quiet. You mean that guy freaking forgot his lines. What are you talking about? I learned quickly that the audience has no clue what the script is. So whatever you do or however you perform is the illusion you're creating for them. Similar thing in business. They don't know. The person that I'm speaking with, when I'm sitting with them, I could have gotten my license yesterday, but in that room, I'm the licensed professional. They're not. So whether if you got your real estate license yesterday or loan originator yesterday or life or financial advisor, whatever license you got the previous day, the next day you sit with somebody, the person in the room, you're the licensed expert. That's really it. So you have to start embracing that. And it took time for me to be able to identify with it and embrace it, because after a while you start fighting internally this imposter syndrome. Like you feel like you have to be successful before you can give advice. Not really. If you're getting good mentorship and also you're offering a service that's needed, you don't have to be a product of the service just yet. I mean, sure, follow your own advice. I mean, eat your own cooking, so to speak, as a chef, right? But you don't have to start right off the bat. So for example, a person right now getting a real estate license, they may be renting an apartment right now. Doesn't mean you have to own a home right now to sell a home. Yeah. Just know your product and just talk about it and help people, but be very transparent and also have integrity about it. That's the important part.
Similar to you, I've been involved in a bunch of stuff.
Yeah. And
I've always had that. Anytime I go into something, I think about it. I would go like, oh, I don't really know about this. How am I going to be selling it? But the reality is that, unless you're extremely good and unless you're already famous, people are not going to look into you.
No.
They just don't.
No.
Right?
No.
And I don't say that in a way that, hey, you're going to be tricking people or just like deceiving people and lying to people. But it's like, okay, you know what? You have to understand that, like, you're not that great. So, like, as long as you're honest and upfront and you're not just giving, I wouldn't say bad advice, but you're not just lying your way to get something. Yeah. If you're doing the right thing for the customer at that moment, you're acting responsibly, people are going to realize that, hey, you know what?
Yeah. I think it's what comes down to is people are worried about whether or not the person's going to trust them.
Yeah.
Trust me for the advice or trust me, period. And there's two types of trusts. And at the beginning is granted trust. Like, for example, if you work for a major company, like let's call it, you work for a bank, you work for JP Morgan Chase. Right, but you just started in that banking industry. At first, you're leveraging the fact that you work for a major company so the person can grant you the trust based on the fact that you work for this major company. But over time, you're earning their trust, right? Because you're doing the work. And then you may leave that company, go somewhere else. Guess what happens? They end up following you. Why? Because we're from granted trust to earned trust. I give people this example all the time. It's like, for example, the last time you flew on a plane, right? I actually went to an office recently. I proposed this question. I was like, who recently went on a plane? Who just came back from vacation? I came back from the Bahamas. Great. Where'd you fly? JetBlue. Cool. What's the name of the pilot? I don't know. Right. That pilot, you have no clue who they were. You have no clue if they were drunk. You have no clue nothing, right? You have no clue it was their first day flying a plane. You have no clue. I said, but you trusted this stranger to put you 30,000 feet in the air in a metal tube and get you to the Bahamas in one piece. I said, you granted trust to JetBlue to make sure that they did their job, right? Now, let's pretend you end up finding out that the pilot, you get to know them, Danilo's the pilot. And then you find out that Danilo tells you, hey, by the way, I'll be flying back from the Bahamas to bring you back to Newark, right? But he's going to change flights. He's going to change airlines. He's going to go, instead of JetBlue, he's going to fly back United. And he may say, Darwin, you want to fly back with me because I got you there last time. So you know what? Dude, what airline? I'll go with you. Why? You earn my trust. You're my pilot now, right? That's the difference between granted trust and earned trust. And over time, you earn it.
Yeah, it's funny that you mentioned JP Morgan Chase. Just a quick story. I started as a teller working for Bank of America. This is 2006, 2005, somewhere around there.
Okay.
But and then in November 2005, I ended up leaving. I was like, oh, I want to do something else. And 2 weeks later, I was like 21, 22. 2 weeks later, I realized, no, like this is it. I can't, So I was like, okay, let me go ahead and start applying for jobs. And then I looked at the job as I can't remember how it come up, but personal banking or something around, in New York City. And at that time, I hadn't gone to college. I didn't have a college degree or anything, but it looked like, okay, those are the qualifications. You need to have a college degree. You need to get your Series C, Series 7, the whole thing. I'm like, oh, am I going to really apply? And I was like, screw it. I'll go ahead and apply. A day later, they call me. They say, okay, you need to come in for an interview. This is in Chase Plaza, downtown New York. I go there. And, I'm sitting there and I'm like super scared. And I talked to the other guys because they had like a round of interviews. It was like literally like 20 people. And I'm like talking to other kids and they're like, oh yeah, I went to the University of Virginia. I went to, one, it was like, oh, I went to Boston College, or like really good schools. And I'm just
Ivy League. Yeah, great.
Yeah, I mean, I wouldn't say Ivy League, but
Well,
like
up
there's
there.
some really
Yeah,
good colleges. And back then I was so self-conscious about me not having a degree. And I was like, oh God, what am I doing here? I was like, oh, fuck it, let me just be myself, and this is not gonna happen. I went in, I did amazing in the interview. And this back then, like it was like you got into a program to get your investment Series C, Series 7, all that stuff. It was like 6 months of school. Bottom line was that I did great, and the guy was like, okay, we're gonna call you tomorrow. They called me tomorrow, and then I just got in, and some other people didn't.
There you go.
But you just never know.
Yeah.
You just never know. Like a lot of people just think like, hey, I shouldn't be doing this because I don't have the qualifications. Mm-hmm. But then it's like, you don't know what the real qualifications are, because the other person might just be looking for something that's not on paper. That's just something that they see, and it's unique. And
That's something that's, I feel, universal in life. I mean, we look at it from a biblical perspective. He doesn't call the qualified, he qualifies the called, right? And so that's how it worked out.
What has been the best decision that you made in this journey in life insurance and fitness, the whole thing? Yeah.
In the business was focusing on building relationships. That was the best decision I made. Getting involved with like networking groups, stuff like that, for me, ended up being the best decision, because those relationships have been opening doors over and over again over time, and it just gets better and better as years goes by. That's one thing, the quote that I got from another, actually a mentor of mine, in the chain, I would call it the chamber business, that he said the relationships are the most valuable currency in your business. And I've mentioned that to other people that have been in business prior to me, for example, since like 2001 and 2008. And they said, yeah, they concurred. They're like, yeah, you know what? During those down markets in real estate or lending, my relationships carried me through. Like, some people had my back, and I was able to push through and weather those storms because I had the rock solid foundation of relationships, people within my sphere. So that was one of my best decisions.
And we were talking this off camera. What is the importance and what is the value of getting involved in communities, and what is the value of doing things that, events and all these things that sometimes, to someone from the outside will be like, why is that guy doing that if he's not making money? Because I get that question a lot where, like, I do a podcast and they go like, hey, are you actually making money off the podcast? Like, hey, I wish, but I'm not.
Not yet. Not yet.
Yeah.
There's a couple of things I'll say to that. And one quote that by the way, I'm going to give credit for sure to BNI, Business Networking International. I'm sure you've been to one of those meetings before, is that visibility creates credibility that leads to profitability, right? So I ended up taking that philosophy to heart and acting on it, and say, okay, well, how can I make that formula work in my advantage? And then my other coach of mine from an office said, hey, you got to get involved with these chambers of commerce and start networking with people, but don't just be a member, get involved. It tied into another quote that I use a lot, is about leadership. And I think leadership is the best form of influence, right? But if you want to be a leader, sometimes you go, how do I start? Well, it's about starting by serving. And the quote that I always use is that if service is beneath you, then leadership is beyond you. So I've always led with that philosophy saying I want to serve because I know as a servant I'll be a leader. And so as I decided to go and be on board of directors and offer my time and volunteer my time without getting paid, I knew that the end result, the dividend I was going to get, the return on my action or on my investment was going to be those relationships. But I was doing it because I was serving. And so I serve, therefore I become a leader in the eyes of the people that are around me. And that then also the formula underneath that platform is working for me. The visibility, credibility, profitability. Because if you want to be more profitable, you got to be more credible. You want to be more credible, you got to be more visible. You can't just be behind a laptop all day and not talk to a freaking person at all and never see you ever again. You got to be out there, right? In some way, shape, or form. And so that's what's helped me out. And so although, yeah, it's all volunteer. I'm not on a salary, by the way, with my Chamber of Commerce. I don't make money there. But it's where my visibility, credibility, and profitability starts to build because of the fact that I'm on a platform that allows me to serve other people and be a leader. That's how it worked out. So I feel like it's returned. Is it slow? Absolutely. It takes time? 100%. Do you give a lot more than you get? Yes, you do give a lot more than you get back at the beginning. But over time, it builds up, just like anything else. Over time, people start to know you, and you start seeing that the influence factor is really working in your favor because influence is important.
So as we wrap up, this is the last one. What was the quote that you told me about being the flower in the VC?
Influence. Because influence is a major factor. I think all of us are striving to get a certain amount of influence because influence is what really drives a lot of businesses, scales, right? And there's an analogy with regards to influence in nature, right? So we all know what a bee is and a flower, right? And most of us are like worker bees. We're going from networking event to event or door to door or office to office or person to person, shaking hands, getting to know people and trying to build your business that way, working your ass off to make that money. Or in other words, like the bee making the honey to bring to the hive, right? That's what we're doing. We're out there working. And the bee goes for a flower, right? Because that's what the nectar is. That's what the magnet is. What does a flower do? Nothing. The flower is planted, it blossoms, and it gives out this magnetic, irresistible fragrance that the bee just can't help but come over and check out this flower. That, in a natural perspective, is a very good example of what influence is. The flower just planted, blossomed, and the bee came to the flower. So I feel like a lot of us try to transition from being that bee to being the flower, right? Because the flower, how much work was it to be the flower? Nothing, but the flower had to go through its own process, right? Had to be in the right soil, with the right light, with the right water, and grow and grow and grow and build and then blossom. And then the idea is that we're trying to go from being a flower, attracting one bee, to being a garden and attracting thousands, right? That's the idea of influence, and I feel like a lot of us trying to get to that point. But you could do that by serving others. That's the way I feel.
Well, listen, Darwin, thank you so much for this, man. I'm always
it's a pleasure. It's an honor.
Happy to get you in here because it's always a good talk, man.
Yeah, I appreciate it. Thanks so much for the opportunity.
In the future, we'll do it again.
We'll do some more. Absolutely. Round 3. Appreciate you, brother. Absolutely.